We're going to move on to our market report. Our market report we do every seminar just to keep you up to date on the stats that have happened since our last seminar. What this slide implies right here, 2025 starts off strong, is we're going sort of doing a continuation, a continuation of 2024. You can see that in the month of January, the benchmark price was 583. It's up 2.8% over the benchmark price of 2024. New listings are up, inventory is up, days on market are up. All of these things lead to a robust market starting a bit early this year. Normally, we don't see the sales up, the new listings up. New listings are up quite a bit, actually, 35% over January of 2024. We don't see that until February or March. So we're off to a strong start. And what we're saying to our investors is get ready because it's going to take off again.
Yeah, for anyone that was on the call 2 weeks ago, we explained that Tim and I actually had to go against each other on a property out in Cochrane. We had to compete against each other to get the property, and I lost. Tim got it for our mutual client. But anyway, that's how competitive it is out there. So when you see inventory levels at 3,600 here, that is including the pending. We actually have 700 pending listings right now. So we're actually at 2,900 active listings. Out of that 2,900, half of them are condos. So we need to stress that. There isn't a lot of inventory. What does that look like? It looks like Tim and I will be competing again after another property because we have so many investors wanting to get in that, Tim, there's not enough properties out there. Yeah. And the good ones are going into multiple offers. And so as Tim said, this has started off very, very early in the year. And normally when the weather is this cold, and I was just looking at the forecast, no word of a lie, this is going to continue. I think it gets to -13 on the 18th of February. And so I automatically was looking at my flights to get out of here so to keep warm. But anyway, that's how cold it is. Normally it cools down, Tim. There's no way it's going to cool down because what happens when it cools down?
The market, not the weather. It's already cold enough.
Yeah. Well, a little bit of both. When the weather does cool down, the listings don't come on.
Yeah.
So the listings get held back. So we're not going to see the inventory, Tim, to the end of the month. And even then, it's going to come on slowly, right?
Yeah. One number we want to look at here is the number of sales. There was just over 1,400 sales in the month of January. Now that's down 12% over January of last year. We attribute that a lot to the nonsense around the tariffs and the trade problems that Trump brought in once he got inaugurated in the beginning of January. We figure that's going to either we're going to get tariffed or we're not. It's going to be one of the two things. And we know that the market eventually sorts itself out. We may have a little dip in sales here, beginning of February, but it always sorts itself out. People always have to buy and sell. Investors are always looking for the next opportunity. So it may be a short-term little blip, but when we talk about how 2025 is going to go, you'll see how we're very, very bullish on it.
Yeah, and we're going to talk about the tariffs and how that will affect Calgary real estate when we get into the presentation tonight, which is exciting. But as you can see, the sales are down. Average price is still sitting at about 605,000.
Yeah, that's average. The previous slide was the benchmark price. You can see that. We like to go up the average price just because we've got more data on that going way back so we can compare more closely. The benchmark price is what the Calgary Real Estate Board uses as an average house in an average neighborhood, and they use all kinds of different factors to figure out that price. But the average price is solid. We can figure that out mathematically.
Yeah, so you know what? We keep going back to this. Where should the average be? We said, Tim, we said a couple of years ago, the average should be at 650,000. We're still not there. The exciting thing that's happening in the real estate market right now is interest rates. And interest rates are coming down. And if tariffs do come into play, there's rumors out there that they're going to come way down. So you know what? There's a couple of other things going on. The lending rules on properties over $1 million has been relaxed. And with interest rates, coupled with interest rates coming down, it means that market, anything above 800,000, it's not going to have that lag. We're already seeing it starting to take off. So if you are thinking of upgrading your primary residence, this would be an ideal time going into this year to start thinking about buying that more expensive property. We're only saying that because all of these economic factors are leading to those properties going up even more. And when the $1 million range properties go up, they don't go like this, they go like this. They do massive jumps, Tim. They go from 1 million to 1.1, $100,000 lift in a year. We've seen it before, and that's what's coming in that market.
Yeah, before we go to the next slide, one more thing I want to look at here is the inventory or new listings, sorry. New listings are up 35% over last January of 2024. So you can see that right now there's more choice, but if as we anticipate more and more buyers decide to jump into the market with a little bit lower interest rates, that will start to fall again, and we'll get into a low inventory situation. But right now, it's very, very good for investors. So if you need to, if you want to look at a house or if you need to get out in the market, just give us a shout, because we can show you what's good in that inventory level, because not every property out there is a good investment property.
Exactly.
Okay, so looking at the average price over the years, I love this kind of graph because it shows you how real estate does go up and down, but in the long run, you can see the trend line. The trend line is continually up in Calgary. That goes back to 2004. We can go all the way back to the beginning of Calgary, and we'll see that trend line still goes up. The first little dip we had in the last 10 years was that world financial crisis. That was about a 10% dip in price. And then in 2015, when the price of oil crashed, of course, it affected the Calgary market because we're resource-based here in Western Canada. That went down, but after that, guess what? It went back up. And then when COVID hit, that was quite a blow to the market worldwide. But even after that, we're well above the levels before COVID in sales in average price. So Calgary is being such a robust market. It's illustrated very, very well in this graph right here.
Yeah, and this graph really shows everybody out there that cash flow is key. This is one of the mistakes Tim and I made in the early days. We were buying properties so fast that we weren't even calculating the cash flow back then on some of the properties. We just knew the market was going up so high back then, Tim. This was in 2002, roughly. This was in, actually, here we go. We could have a look at it. This was actually in 2006 to 2007, we bought the majority of our properties. And you could see the massive jump from 2006 to 2007 at something like $100,000. So we didn't care about the cash flow, but guess what happened? We got caught out in 2008, 2009, and we were holding on to all these properties, and some of them, Tim, we couldn't rent them out. So first off, what we do is correct that mistake for our clients. We buy properties that we know no matter what, the rentability is there through any recession, through any downturn. And that takes skill, right? This is what gets us upset when we look at other investors, other people buying they come to us. Investors come to us and they say, hey, we can't rent this property out. Why can't I get it rented? And we'll be like, well, why did you buy it in that segment of the market at that time? And they're because our realtor told us. And we're not here to give a realtor a hard time or anything like that. But Tim and I take pride in making sure that if we're buying someone a property, that no matter what, it's going to be rented out, because we've been through that. And then no matter what, the property should be cash flowing from day one, or your portfolio should be cash flowing enough to handle downturns. And you can see that, we've gone through these downturns. And if we do go through another one and your property's cash flowing, you simply just have to ride it out, okay? It's about having good properties. We always say this, maintain your properties. We're leasing properties out now, and we won't lease anything that's not maintained, or we won't work with a landlord that's not willing to maintain that property. Better still, we're actually legalizing basement suites on behalf of our investors right now. We're taking full control. We're putting our contractors in, we're getting the city in, we're running the analysis on how much it's going to cost to legalize a basement suite, and then we're going ahead and doing it, implementing it, and then we're putting tenants in there. So we're going the next step for our clients, a one-stop shop. But the reason why we're doing that is so that the investor has a successful journey and continues to invest down the road. And that's as simple as I could put it, Tim.
Yeah. Now, one point, the elephant in the room that we have to mention, especially right now, is where is it going to go? You know, where is the market price going to go? The average price, is it going to continue going up? Or is Donald Trump going to have a huge effect on our market and cause prices to fall? Will it affect our economy that much? Again, we don't have a crystal ball, but what we can tell you is we may see little dips like we did over here. You know, the world financial crisis, COVID, price dip like that. We may see that again. But overall, eventually, you know, Trump's going to be out of office. Eventually, someone else is going to take over the government down there. Trade wars don't last very long between Canada and the United States. Yeah, we have, you know, tit for tat with tariffs every now and then. Last Trump's term, we had it, I believe, with softwood lumber and dairy and things like that. But eventually things get worked out because we are friends and neighbors. So we see this trend, this long-term trend, continuing to go up over time. And, you know, maybe we'll see a blip this year, maybe we won't. But I'm fairly confident that trend line is going to continue to go way up.
Yeah, and how do we know that? We know that simply because of the average prices in BC and in Ontario. And you know what? Investing in Australia, I tell Tim all the time, I've seen it myself. Coming from Sydney, it got so expensive that people, they're just forced. They're just forced to go to other cities. And then you see, I could name some cities you guys probably don't even know, like Adelaide or Hobart. You would know Brisbane, but these cities, the real estate went through the roof because of that. And I always said to Tim, I said, Tim, this city we live in, Calgary, it is so awesome. We have the infrastructure here. It's clean, it's safe. You're near the mountains. You've got an international airport. You can go anywhere in the world. So having all this sort of stuff here, and I'm not even talking about the hospitals and you know, the universities and everything like that, but Calgary only has one way. Yep, we don't have a timeline of when it's going to happen, but this average of what we're thinking it should get to at 650, once it gets to 650, we could move that goalpost all the way to 850 as an average as a whole here in Calgary. And you might be sitting there thinking, oh, you're crazy. I'm telling you, I was with a guy from, is it Deloitte? Deloitte?
Yeah, Deloitte.
Yeah, Deloitte. I was with an accountant from Deloitte having drinks the other night, and he had the option to work in 3 cities. One was Calgary, Vancouver, and Toronto. And I couldn't believe he was telling me that they paid him more to come to Calgary. They paid him more to come to Calgary. He's living in the Riva building, right? And he doesn't even go to the office. He goes to the office once a week. But they paid him more to come here and work for the same job in Vancouver or Toronto. And the cost of living, he told me, was like 20% cheaper. So he's like, it was a no-brainer. Single guy. Originally, he's from, I believe, from Pakistan, lived in England, and now works here for Deloitte. And he's like, I'm glad I did it. So when you hear stories like that, it just proves that, you know what, people are just going to wake up and say, yeah, why not?
Yeah. Okay, so the last part of our market report always deals with mortgages. Danielle DeMarco was unable to make it today to do her presentation. But what we can mention is that interest rates did fall last week. So what we are looking at is a lot of the big banks are coming out and starting to say that they want these interest rates to fall faster. They want to get it all the way down to 2.5% or 2%, or even 1.75%. That's the bank's rate. So you can add 2 and a bit to that for the bank's rate, lending rates. We think by the end of the year, it's going to be at least 3%.
Yeah.
So, you know, it's very, very good news for investors. But again, stay tuned. It all depends on, you know, how the economy is doing, how the government, what government comes in the election in the fall, or could be in the spring once Parliament gets back in. So we're just happy to see that rates are going down.
Yeah.
Right.
That's good.
Because we've gone through a few years of very high interest rates. If you were on a variable rate, your mortgage amount went through the roof. And people are having to renew into this higher rate after they, you know, 5 years after, 3 years after they got a mortgage at very, very low rates. So there has been, and there may even be a little bit more pain for, you know, mortgage holders.
Yeah.
So,
it's a tricky one too.
Yeah.
Should you go fixed? Should you go variable if it's coming up? You know, it's a tricky one.
Yeah, so that's our market report for today.
Yep.
If you want more market reports, again, we have them on our YouTube channel, Crew TV. Just subscribe and you'll get these market reports every 2 weeks.
Yeah.